Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. Well, this is the first green candle after almost five red candles in the weekly time frame chart. Now, does this mean that this is a reversal? Does it mean that some positivity is coming back into the market? Well, let's analyze into depth and try to understand what's happening. In the weekly time frame chart, we can see that prices have retraced to the 23.6% Fibonacci retracement, and even there is a gap over here which I have been clearly stating and sharing with all of you. So this is a pretty decent support for the market, and that is the reason why we can see multiple bounce back in these zones in the daily time frame chart. But this time, this particular candle was responsible for forming a green candle in the weekly close. Now, if we go back and if we just check these two candles, this one candle and this second candle, we can clearly see the size of this big green candle is so large enough that it is able to engulf two candles at a time, which is pretty rare. It doesn't happen very often. So this clearly states that on Friday, bulls were very much into control. But does this mean that we are in for a reversal? Well, for that we'll need to check the hourly time frame charts. In the hourly time frame charts, if you can see, there has been a constant Dow theory working over here, which is clearly stating that the trend is down and we are forming lower highs and lower lows consistently. So the first thing what Nifty needs to do is close above this zone, possibly above 19,500. A close above 19,500 would induce a lot of confidence in the minds of bulls, and it could lead to some sort of positivity in the market. All right, this is the first sign. When this happens, you'll have to check what all sectors are probably trying to take the Nifty higher. Okay, so first we'll have a look at the Bank Nifty. Okay, so when we look at the Bank Nifty hourly time frame chart first, what we see is 1, 2, 3, 4. Again, lower lows, lower highs. But then if we look over here in the weekly time frame chart, something interesting has happened. Okay. The interesting part is this is a high wave candle. And this high wave candle has been formed at a juncture where there is a lot of support and after a steep correction in banking pack. Generally, high wave candles appearing at a support is a sign that things are very much overstretched on the downside if they appear at a support. But just by a big high wave candle doesn't mean that we are going to take a U-turn. We need a follow-through buying happening in the banking pack. And you can see the trend is currently flat. Okay. And there is a lot of resistance which is visible in this zone of banking. You can see this zone. Constant up and down is going up. Okay. So first thing is we need to close above 45,200, 45,300. Then something clarity will come in the banking pack. Until and unless that does not happen, it will be difficult for the banking pack to support Nifty. Now, in PSU banking chart, if we have a look, PSU banking chart are relatively better placed in comparison to the private banking pack. And you can see that the trend is up. Yes, we are consolidating up and down, but still we are trading above the moving averages in the weekly time frame chart. In the daily time frame chart, things are okay. They are not great. And the main reason is the king of PSU banking pack, SBI, is not doing that well. In the weekly time frame chart, the trend is flat. It's consolidating. And in the daily time frame chart, the trend is flat. So SBI needs to take the leadership over here and starts to go up ahead. If this happens, probably the psychology and the sentiment in the PSU banking pack will change. And there are other stocks which are trying to do some good work in the PSU banking pack. One is possibly Bank of Baroda. I can see that the trend is flat currently and it is consolidating and it has corrected. But there is a very strong support over here. And if you check at this support, we have 1 and 2 small hammers. They're not big, but small. Now, if we see some follow-through buying coming up over here as a swing trader, I believe people should not miss this stock, Bank of Baroda. The second stock, according to me, if you look at PNB has been really outstanding the way it has been performing. I had shared with all of you my positive views in PNB somewhere over here, and since then it has been slowly and steadily going up. Okay, so these are the stocks which you can look up to, but SBI needs to step up. Once SBI step up, I guess the leader of the sector is SBI. Once it steps up, then probably the sentiment in this particular sector will improve a lot. Private banking pack. Private banking pack is just staying there. The trend is up in the weekly time frame chart, but the momentum is missing. And if you can see in the daily time frame chart, prices are just going up and down. Why this is happening is three stocks. One is HDFC Bank. If you check this stock, it is underperforming. It's just going up and down. Second stock, Kotak. It's also looking weak right now. You can see the way it has come down. Consistent lower highs, lower lows in the daily time frame chart. Even in the weekly time frame chart, if you see, things are not looking great. And one another stock is ICICI Bank. It's not very weak, but it's not able to perform and it's not able to go up. Yes, in the last Friday session, it has been able to go up, but it needs more positivity. Axis Bank, on the other hand, is a private banking stock, which has been able to perform pretty nicely. So as a trader, if I want to trade in private banking stocks, I would look up to Axis Bank and HDFC Bank, Kotak Bank. They need to step up. If these two stocks try to start outperforming, then the chart of the private banking pack can improve. Energy pack. Now, if you see what has happened in the energy pack is that there has been a trend line breakout over here. This is the first point, second point, third point, and then we have a retest. Generally, after the retest of the energy pack, we can expect a follow-through buying coming up, and that follow-through buying, if it breaks this high, then you will see a very good momentum on the upside. First stock which I had shared with all of you, I think in last couple of videos, was GAIL. It was consolidating, but it has been able to provide a decent move on the upside, and it is possible that the stock will continue to rally in the upcoming days and weeks. Second stock which looks interesting, I'm not saying that it will start moving up from here, but what we can see is there was a small gap in Reliance. I guess this gap has been filled, and we are trading somewhere near the 38.20% Fibonacci retracement. There is a candlestick cluster also over here. So we are at a very decent support. Now we need to wait and watch. Do not jump into the stock, wait and watch and see what things happen. If it starts bouncing back, then probably things will look interesting. Metal pack. Now metal pack, if you check properly, what has happened is there had been a array of 2 to 3 negative candles. Even this candle was negative. Suddenly there is a buying coming up in the last week. Now this was a surprise. This was a surprise for all of us, including me also. And there had been some short-term breakouts in the metal pack, but they failed. And then the second time they went up. And it happens in the market. It is okay. It is completely all right, because you cannot expect as a trader that all your views will work out. But the bigger picture is, if you check the weekly time frame chart, we have a higher low and we also have a higher high over here. So if this particular high right now, we are able to surpass this high, then we are in for a very big run up. Okay. But this is not the time to probably go and jump into the metal stocks. And the reason for that is, as a short-term trader, as a swing trader, all of them have run up way too much. Even as a positional trader, you are late. But in coming days, if you see some consolidation happening, if you see some sideways moving happening, and if you see that the stocks are once again available at a juncture where the risk-reward ratio in metal pack is better, only and only then I would like to get back into the metal pack. Otherwise, I will wait and watch. Okay. Now, Auto pack. Now auto pack also, if you see, one interesting thing what we need to understand is generally when you see auto pack, and if you see whenever the RSI in the weekly time frame chart, it goes in this zone, you will be able to see some meaningful consolidations and correction in the past, even over here somewhere. You can see some meaningful corrections possibly happening, all right, even in this zone, okay. So generally there is a tendency that the auto pack, they generally try to correct a little bit and then they try to go up. Even in this zone, you can see they've corrected and then they try to go up and then they suddenly correct. What has happened over here is we had rallied way too much. I guess this RSI reading had been seen past in 2021 Jan and August 2016. So we were extremely overstretched. There is no doubt about that. And then we saw a lot of negative candles and suddenly a spurt of buying. And now if I convert this chart into a line chart, we have a higher high in price and lower high in RSI. Now, is it a top? No, but it surely means that the momentum is slightly weakening in the auto pack. But if you check the shorter term charts, which is the daily time frame charts, things are looking much better. So as a trader, I personally would like to say that I would not be interested in this particular sector as a positional trader. As a swing trader, yes, it's a different thing. You can probably look at stocks which have just started rallying. Okay, probably one of them is Ashok Leyland. It had rallied way too much. Now it is trying to come down. If it is available at a place where the risk reward ratio is favorable for the bulls, and then if it gives a short-term breakout in the shorter term charts, maybe you can fancy your chances. But stocks like Maruti or any other stock which has run up way too much in the last few days, I would like to avoid them, because where would a trader keep a stop? Where would he take an entry? So that is what we need to understand. IT pack. Now IT pack is one sector which probably is very attractive. Now what is going to happen? It's a different question, but it is certainly looking attractive, and the reason is this sector has not performed, first of all. In the monthly time frame chart also, it looks like it's coming out of its hibernation and it's trying to make a move. It's trying to make a statement. In the weekly time frame chart, we can see there is a rectangle pattern, and multiple times we have seen this pattern worked out. And in this zone, we have seen multiple times the rally ends and it goes and tests the lower end of this rectangle. Now, this is the first time, if you see, that a candle has closed above the rectangle, okay? But we need to surpass even this wick. If this is possible, you will be able to see a decent rally coming up in the IT pack. But please understand that you cannot just go and have a look at all the IT stocks. For me, only a couple of them are looking attractive. One is possibly Tech Mahindra. Second one is Wipro. And the third one probably I will have my eyes on is HCL Tech. Okay. These stocks need to perform, including Infosys. Infosys has done its bit. It has been able to close this gap. If it continues to rally, it will be really helpful for the IT pack overall. Financial sector. Now, if you check the finance pack stocks, what is happening is we are consolidating. We have corrected. There is a high wave candle. And after this correction, there is a very large pullback. Now, the size of the candle in the finance pack is pretty big enough. But again, just like Bank Nifty, we need to surpass a certain zone and we need to give a clear-cut move on the upside. Only then the sentiment, the overall state of trend in the finance sector will improve. FMCG pack. FMCG pack, it remains to be consolidating in the weekly time frame chart. In the daily time frame chart, it continues to look weaker. If we close below this particular zone, then prices will continue to correct on the downside. And I guess as a trader, the leader of the pack is ITC. So again, this is a support, probably over here 434, somewhere over here. If you close below this, we'll continue to move lower. And if we want to improve the overall state of trend, we'll need to give a proper move on the upside. Just one day up move is not going to be enough. Consumption pack, again, you can see, I guess things are a lot overstretched over here, but sometimes, what happens is in a bull run, not any market is extremely overstretched and not any sector is way too overstretched. Things start rallying way much faster before they should actually happen. And that is what is happening in the consumption pack. And this particular formation of the candle is impressive. If we see some follow-through buying happening in the consumption pack in the next 2 to 3 days, I guess we will be able to test the recent highs. Infra pack, in the weekly time frame chart, things are overstretched, but in the daily time frame chart, it seems that things are improving. And what I can see in the infra pack is that the cement stocks, especially, they are looking interesting. You can have a look at ACC. Even Grasim is trying to peep out its neck. India Cement, again, it has given a breakout. Ramco Cement is not given a breakout, but you can keep a watch on this one. And Ultra Chemco. This one is actually looking good in the weekly time frame chart, but in the daily time frame chart, somehow, due to all this resistances, it's not able to perform. Okay, so one can have a look at the cement stocks. Pharma pack, I guess, there's rallied vertically way too much. Needs to correct, needs to consolidate. But as a sector, it's coming closer to the 23.6% Fibonacci retracement. Whenever and wherever this particular zone is tested, after that, as a short-term trader, as a swing trader, not as a positional trader, I repeat, as a swing trader, one should keep watch on this pharma pack, because the swing of this particular rally is way too big. 23.6% Fibonacci retracement may play an important role. Okay, so once we have the prices over there, pharma pack may look interesting to short-term traders. Realty pack, it has rallied pretty nicely, and I guess I had shared one stock with all of you, which was overall Realty, and it has been able to provide a short-term breakout, and chances are it might continue to test and test its recent high and maybe even rally above that. Public sector stocks. Well, this particular sector continues to rally, way too overstretched, but as a swing trader, it has been able to provide a decent rally on the upside. And if we have a look at the stocks, okay, then there is one stock, which is REC Ltd. It has rallied pretty nicely. And if you check the RSI, it is at 93.76. Even the daily RSI is trying to come down. So if you're a positional trader, be careful and trail your stop losses. And if your stop loss gets hit, the trailing stop loss gets hit, kindly exit this stock. Even other stocks in this particular sector, they have rallied way too much recently. So as a trader, I would like to concentrate on stocks which have recently given a breakout. One is Coal India, and the second one is NTPC. All right. Don't look to stocks which have already rallied. Try to concentrate your view on only on stocks which have recently provided a breakout. Mid cap continues to rally, and weekly RSI at 85, 86. In the daily time frame chart also, the rally continues. If you're holding any stocks in mid cap, then you can continue holding them with a trailing stop loss. But any new view on this sector as of now, I would avoid, because as a positional trader, I guess people would have taken positions somewhere over here and certainly not over here, right? So again, summing it up all, as a trader, we need to understand that the sectors are pretty much mixed match. My main concentration is currently on the ID pack, because it's trying to come out of a consolidation, of a very, very long consolidation. There are few other sectors like Autopack, which were overstretched. They have provided a rally. Even PSE sector was overstretched. It is trying to go up higher. But again, we need to understand that just because prices are going up doesn't mean to participate in all the moves. You cannot participate in all the moves or all the breakouts. You need to be pretty sane and need to understand that stocks which have not performed, and when they start performing, you should only participate in those stocks because the risk reward ratio would be favorable for you in those stocks. All right. Take care, guys. Stay safe. Thank you.